Hey everybody, so it's Lenny and Teodori here, and it is obviously getting to the end of the year. That's a holiday season,
Yeah,
as you can tell by the decorations behind
we
us.
started a little early.
Yeah, well, this isn't really early, but that's our secret. But anyway, what we wanted to do, especially as we're closing up 2023, is we want to have a brief discussion about where we see the market going in 2024. So for all of our listeners, our clients, and the new folks that we're talking to, we want you to get value out of this video. Even though we can't refer to all of the resources of which we are coming up with these conversation pieces, we just want you to know that we do watch this market every day, and what we're speaking is what we believe is going to happen in our real estate market going through 2024. This is an exciting time, and it's a time to take advantage if you are a buyer looking to buy, and if you're a seller looking to capitalize on the equity gain that you have, or if you're a multi-property owner. This may be the time to leverage some of your equity and maybe pick up some other opportunity properties because the opportunities are here.
Exactly. In this video, Lenny is going to unpack by answering my questions as to what's going to happen with the interest rates, what's going to happen with the inventory, what's going to happen with the demand, and what's going to happen with the prices in 2024. Let's just start with the interest rates. So, Lenny, what do you think the interest rates are going to kind of like a land in 2024, or how they're going to flow?
Okay, so as we know, just in the last couple of weeks, in the latter part of 2023, we've seen rates go from an 8 handle, meaning just over 8%, to now to a 7 handle and just above 7%. Now, remember, the rate is driven by what we call the 10-year Treasury bill, right? And of course, the Feds who have increased the rate over the last year and a half since mid-2022.
Due to the inflation.
Which is due to inflation. They're trying to stem inflation. The goal is to get inflation down to 2%. And we've been running, now we're running about 4.5, 4.7%. So the good news is that we're down in the inflation run, but the bad news is rates are still up. So where will interest rates go in 2024? I think they're going to remain right around about 7%, maybe a little bit above, maybe a little bit below, depending on where the T-bill goes. I personally think the T-bill, which is about 4.2 today, is going to round off around 4.5 throughout most of 2024. It may drop a little bit less than that in the latter part of 2024 to 4.2 again, but I think rates will be approximately where they are today. And with that said, for any of our clients and those that are not our clients, if you're looking to even improve that upon that rate and get it down to 6.5, 6.25, you should be contacting your banker who you bank with and look at the rates through that banking relationship, because there are a lot of better rates to be had today, somewhere in the 6.25, 6.375.
There's a lot of creativity in the market right now. So how about the inventory? What do you think is going to happen with the number of houses for sale? We have had, very short supplies for a long, long time. So where do you think 2024 is going to go?
Okay, well, that's a great question. So pretty much since mid-2022, our inventory has declined. We're running at about a third nationally, as we typically would do in a normal year.
Exactly.
Our closed transactions are down as well. So I think inventory levels are going to stay about the same. I think the insight, though, is that the market, the receptivity of the market as to where the rates are, mortgage rates, and of course where the inventory is at today, everybody's starting to accept that more. As we accept that more, I believe we're going to see more inventory come out on the market for more buyers to get into those deals. I also think that with this economic cycle that we're on right now, we're seeing people increase their debt. And I think you're going to look at some more cash out refis, and people are going to pay down some of this credit card debt that they're trying to get by right now.
Yeah.
Because we just haven't adjusted as quickly as to the Fed's adjustment to the rate to inflation. And because of that, we have a lot more debt being increased by most Americans today.
That's for sure. So how the interest rate and the inventory will affect the demand? I mean, the demand, the affordability has been has diminished year over year for the client, for the buyers out there. So is there a light at the end of the tunnel for them?
Yeah. So we mentioned one or two things already. We said inventories are down, right? Which kept prices very strong.
Exactly.
By the way, there is no real estate recession. We'll talk about that in a second. And then also rates. There's a more acceptance as to where the rates are now. We're just not going to be in the 3% plus or minus range anymore, and I doubt if we'll ever see those days again. But that's just Lenny's theory. Whether you believe it or not, let's see what happens. But relative to the demand, I think there's two primary components. First component is most boomers, which happens to be my generation. Most boomers who own 70 to 80% of all the real estate equity in all of the U.S., they're just not selling. They've refied their properties back during the low interest rates, somewhere in the 3+% rate. And so they're just holding on to those properties. So unless they have a family member that needs it, they're holding on to it and they're collecting rents, as they should, by the way. So, but because that really locks down a lot of inventory, there's not a lot of inventory for sale, which means that the buyer demand is high. With the buyer demand high, it's going to keep prices very, very strong.
Oh, so that was my next next question, and the last topic of this video is actually the prices in 2024. So you kind of started, but finish it.
Yeah, so I think prices in 2024 are going to be very strong. I think they'll remain strong. I think we'll see appreciation in our areas specific, plus or minus right around 5%. I think across the U.S., you'll see between 4 to 6%. The double-digit appreciation days are over for a while. Let's talk about that in 25 and 26. But in 2024, we're going to remain the same. There is no real estate recession. As we know, there's only been a real estate recession in regards to the number of transactions.
Right.
So last important point is we started this year with the expectations of doing really about 4.5 million sales times 2 is almost 9 million sales. Then we refined that forecast down to about 4.1, 4.2. Based upon our numbers today, we'll probably end the year somewhere just north of 3.8 million.
Yeah.
So 2024, we're expected to see a total sales throughout the 12 months of 2024 in the 4.1, 4.2 range.
Slightly
by the way,
over 2023, but not by much.
yeah, so it's going to be more than 2023. And by the way, most of my 23 years career in this business, we've been north of 5 million.
Exactly.
4.8 to 5.0 million transactions a year times 2, remember. So transactions are going to continue to be down. They're going to keep prices very, very healthy. Inflation is going to be limited. Appreciation is going to be small. And rates are where the rates are. If you're a buyer in desire to buy, get in the market as soon as you can. And unless you have a need as a seller to sell, you're probably going to sit on your property.
But a lot of the sellers are buyers too.
Absolutely. Anyway, did we cover the forecast?
I think that's it.
All right, everybody, listen, happy 2023. Have a great holiday season. Have a prosperous, healthy, and happy new year. We're looking forward to talking to you every day, week, and month throughout 2024.
Thank you.
Take care.